Hello friends, this is Raj Sastry from Raj Option Trading. Today is May 13, 2022. Hope you're all doing well. In today's segment, we'll take a look at contrarian plays. We'll take a look at stocks with high put volume. That means people are really buying put options, hedging, thinking stock might go down. And there is also a very high short interest. People are shorting the stocks. So when this happens, it's a contrarian play because folks are betting stock will go down, but many times stocks tend to go higher, squeezing those short sellers and making sure those put option buyers they lose their money. So with that, let's go ahead and get started and look at such contrarian play and see how we can make money. So with that, there is one company here, Cooper Software. It's one of those contrarian play. So let's jump in and get started. All right, so we'll start with a quick market update. Look at the contrarian plays where there's a very high put volume and there is a very high short interest. So that tells you folks are really betting these stocks will go down and go down pretty fast. But sometimes magically these stocks start going higher. So that's what we're betting for here. These are the contrarian plays. So with that, let's jump in and get started. So from a fear and greed index perspective, look, we're in the extreme fear zone right now. So we don't get so many days like this where we have the extreme fear and the number is 6, single digit number here. So this does not happen too often. So if you have some money, put some money into the market. Buy some great ETFs like QQQ, SPY, SMH, or buy favorite stocks with good fundamentals that we talk about in this channel all the time. So with that, let's jump in and get started. All right, from a market perspective, look, market is really wondering where to go. Yesterday, we had a nice upswing toward the end of the day. Look, after 3 p.m. yesterday, stocks started going higher. Dow Jones up, same story with the Nasdaq after 3 p.m. Nice uptake, and same story with the S&P 500. And look, in the futures market, futures are opening to be a little bit higher. Look, 260 up in Dow Jones Industrial Average, 47 plus in S&P 500, and Nasdaq also up nicely, and Russell also up. Looks like today it might be a good day after a long week or so, or week or two, where stocks kept on sliding down. So with that, let's jump in and look at the market here. From a market perspective, look, right from April here, we are in a downturn, down big time, and now there is a small semblance of uptick here. We will see how it goes. Keep a close watch. At least a nice candle with a green candle to see. And same story, market has been down relentlessly in S&P 500 also, and all the major markets. All right, now what we'll do is we'll look at contrarian plays. These contrarian plays have got a high put volume, meaning there is a very good put volume. Folks are really hedging and buying put option, making sure if the stock slides, they will make some good money. And folks are also shorting these stocks, thinking they can make some good money as the stock falls. The folks who sell short, they will make money. So folks are really selling these stocks short, hoping to make some money from its downfall. And there is a low RSI, meaning stock is sold off completely at these levels, and high volume is more than 1 million shares. So when this happens, look, first two are very deadly here. There is a high put volume, plus there is a high short interest. That tells you, folks are really breathing down these stocks' neck, and they want these stocks to go higher. Sometimes when there is too much negative and too much hedging going on, stock will really turn around and go higher. Especially the good ones with the overall score more than say 30 or so, and also with the better fundamentals, they seem to go higher. We'll try to look at such names here and see what we can buy as a contrarian play. All right, now let's go into the list here. From a list perspective, look, we got the list here. Keep a look at these stocks here. All these stocks have got very low RSI. So RSI all below 50. That tells you all these stocks are sold off big time. And look at the short interest here. All these stocks have got very high short interest, more than 5%. That tells you there is all these short sellers are selling this, borrowing money and selling these shares short. I mean, they borrow the shares from the broker and really short it. And then you got put call ratio. Put call ratio is more than 1 or more than 2 here. That tells you there is a more put volume compared to the call volume. Put volume is more than double the call volume. That tells you folks are really bearish. They are buying put options in a big quantity. And then we also have the IV percentile here. That's the implied volatility percentile. So implied volatility percentile will tell you where is the implied volatility on a scale of 1 to 100%. So when the implied volatility percent is high, for example, Coinbase here, so that tells you it's a very volatile here. So by looking at implied volatility percentile, RSI, the short ratio itself, and put call ratio, you can go after very good option strategies. So even if you're not an options person, you can go with the stock strategies. As an example, we got Coinbase here. Coinbase, look, stock came down. Right now it's $58. I cannot believe it. And as you see here, RSI is 22, tells you stock is completely sold off here. IV percentile is 100. That tells you it's a very volatile at this time. And short ratio is relatively high, 6%. That tells you there are a lot of short sellers and a lot of people are hedging and buying put options, thinking stock will even slide further below. And at the same time, the float, which is a number of shares outstanding from a dollar amount perspective, it's very low. That tells you there is not too much supply in Coinbase stock. So with that, it tells you it's a relatively good play here, but folks want the stock to go down. But look what happens. Yesterday, Coinbase went higher by 8.9%. That tells you, Coinbase want to squeeze those shorts and make sure these put option buyers lose their money. That's why it's going higher. And look at the fundamentals here. Overall score is 58. That tells you it's a relatively well-run company. And look, it's got a nice sales margin, sales growth here, 172%. Nice net margin, 46%. So you can do multiple things here, and we'll look at some strategies you can do here. So what we'll do very quickly here, we'll go into Thinkorswim platform and look at Coinbase and look at few option strategies that you can do. And if you're not an option person, you could buy some Coinbase here at $58 and wait and watch, and Coinbase can go higher here. It's already up 8.9% yesterday. It can even go higher. So with that, let's quickly hop on to Thinkorswim platform from TD Ameritrade. Alright, so I got Coinbase here. Look, Coinbase stock has been sliding, as you can see here. It's we got a 2-year 1-day chart here. It's been down, as you see here. Look, it's a nice downturn here and sliding down. So at this time, look, IV percentile is 100. That tells you there's a very high IV percentile here. This is a very volatile stock, as you see here. And at the same time, the relative strength index, or RSI is dropping down, as you see here. It's one of the lowest levels here. Now it's trying to strengthen, as you can see here. And implied volatility, or IV percentile, implied volatility is jumping off, going much higher. And look, from a DMI perspective, the red line is going higher on top, the blue line is down here. The distance is very significant. That tells you at this time it's completely bearish. And on the balance, volume is wondering where to go. Right now there's an uptick here that tells you folks are really buying this as a contrarian play, and they want stock to go higher, and smart money is slowly pouring into the stock here. That's why it's a contrarian play here, given there is a very high put volume and short interest. Stock is reversing the course and trying to go higher. And at the same time, if I go here and go to the option chain here, let's go to the option chain in Coinbase and go to maybe say 126 days out. And before I go any further, look, we got here put call ratio. 2.41. That tells you, folks are really buying the put option. They want stock to go further down. That's why put call ratio is so high. And now let's you can also look at here. We got total volume here. There's a call volume 235,000, put volume 564, put volume clearly more than double the call volume. That's why it's a contrarian type play here. All right, now let's go into option chain here. So what you can do in option, as you go through the option chain here, if you're not an options person, you can just go ahead and buy some Coinbase here. Put it in your long-term account. You will do very well. Come back and check in maybe 6 months or so. You will do well. So if you're an options person, you got more more tools to your exposure here. So if you're just an options person, you could go here, and stock price is at 58. One of my favorite plays at these things is to really to sell put option. You could go here, maybe say 49 days out, and look, in this case here, 49 days out, there's not too much too many things going on here. So you could look at 42 days out. So right here, look, we got more openings here. So that's why it's more things to look at. So here stock price is at 58 here. Look, we got a lot of these strike prices here, $30, $35. Look at nice things going on here. And as you see here, we got probability of touch. Probability of touch is very high here, so you got to be really contrarian to do these options here. So if you are a contrarian here, you could go here and look, there's a 225. So if you sell a 30 strike put here, you can collect nice $2.25 given there's a very high volatility. So you could play that game and just go sell a put option. If the stock really comes to $30, as you can see here, by June 24, you could buy it at $30. Otherwise, you get to keep your money, which is max profit, $225. Very risky strategy, but you could do something like this, and you could confirm and send. Done. So if you're a little more risk averse, you could do a spread game here. You could say 40 and 30 spread, so that way you take $10 wide risk here. It's a defined risk strategy. You could just go here and just sell here, go to sell, and you want to sell a vertical here. There you go. So you are selling at $40 and you're buying back at say $30. So it's a $10 wide spread. There you go. So for that, you're collecting $2.45. This is a very good strategy. You're not taking too much risk. It's a defined risk strategy. So you could confirm and send this here. Your break-even price is $37, which is much below current stock price, and your max loss is $7.55. It's a $10 wide spread. You're collecting $2.45, so that's why it's just $7.55 is your maximum loss here. So you could confirm and send. This is one of the good strategy, especially when the stock has got high volatility. I typically tend to do spread trading, so I don't take too much risk. At the same time, I bring in some good amount of money. This is a very good strategy here. You could confirm and send this, and you could also do a couple other strategies and go from there. So if you go here, we got here two put options that we sold here. One is put spread, one is put option. So let's look at few more here. Go back to our spreadsheet. All right, so we took care of Coinbase here. You could do similar things in other names here. So as you look through here, we got more. Let's go here. All right, keep watch on IV percentile, RSI, and short interest and put call ratio. These are the key to the castle when it comes to contrarian play here. And we got few more here. Look, we got a few stocks that are going high. Keep a watch on 1 day and 5 day. Some stocks want to go higher in 1 day, 5 day. For example, we got one here, CERUS. It's a very small stock, looks like that's trying to go higher in 1 day and 5-day. That tells you this stock right now, it's got a very high put call ratio. Look, put volume is much more here, and short ratio is 6%, and this does not have good fundamentals. Looks like net margin is negative, but stock want to go higher. So in these type of scenarios, given IV percentile is very low here, let's see, IV percentile is 33. You could be a buyer here. You could even buy the stock outright and go from there. It's a contrarian play because fundamentals are not great at this time, mainly because it's losing money. But given there is a high short interest here, short interest is 6%, and there is a very high put call ratio. You could buy the stock, expect the stock to go higher. And you could also do the same thing in other stocks here. Look, few stocks are going higher in 1-day time frame. Look, all these stocks here in 1-day time frame, they're going higher because at this time there is too much negativity going on. That's why they're going higher. So you should look at the IV percentile here. When the IV percentile is high, say above 50 or so, you could employ some put option selling strategies given stock is good fundamentally. But if the IV percentile is low, you could employ buying the call option and employ such strategies. So in the options world, you always have to look at the IV percentile here. When the IV percentile is higher, you have to be a option seller. When the IV percentile is low, you can be option buyer. So with that, we got one more here, nano dimension here. Look, it's got a very low IV percentile. IV percentile, let's see here, IV percentile is just 28, which is very low IV percentile. Looks like stock want to go higher in the near term. In this type of scenario, given stock price is very low here, you could buy the stock outright as a contrarian and go from there. There is no option play here given stock price is very low here. And also keep watch on the other IV percentile here. So you got to watch on high IV percentile as well as low IV percentile, and then devise some strategy accordingly. Similarly here, Mankind that we got here, this one also has got very high put call ratio and relatively low IV percentile 46. So for this one, because stock price is low, you could just buy the stock itself outright. And we got here Beyond Meat. Look, Beyond Meat got crushed, and this one also is very contrarian at this time here. Look, IV percentile is 96, high IV. Short ratio is also very high. Put call ratio, the put volume is very high. So this also calls for a contrarian strategy. You could play some contrarian strategy at this time here. You could slowly buy some Beyond Meat, given there is a lot of negativity, but understand it's completely contrarian, given Beyond Meat does not have good fundamentals. That's why it's completely contrarian at this time. All right, so let's go here. List continues. Look, we got few more here. All these have got very high short ratio and very high put volume. Keep a watch here. It's a very high put volume here. At the same time, keep a look at IV percentile here. IV percentile sometimes is very high, sometimes it's very low. That's where all these option strategies will come into play. And also you could look at how the stock is doing in 1-day, 5-day. If the stock is trying to go higher in 1-day, 5-day, you could basically follow the trend and jump out of the bandwagon, mainly because RSI is low here. Look, many of these stocks are trying to crush these short sellers and put option buyers. Look, ONB, just a $15 stock. Look at the put call ratio here, 9. That tells you a lot of people are buying put options here. But stock wants to go higher. It wants to crush these short sellers, and given the RSI is relatively low here, you could still buy ONB here and participate in the crusade of these short sellers, and you can actually squeeze those short sellers. And we got few more here. All these stocks have got so much low here, so much negative press. Look, even though market went down yesterday, all these stocks went higher because these are contrarian play, mainly because look, there is high short ratio and high put call ratio. That's why these stocks cannot take it anymore. They want to go higher and they want to crush those short sellers. All right, so if the stock price is high, for example, you got VIX here, stock price is relatively high, $63. You could see how with the fundamentals look from a fundamental perspective. Looks like the VIX is a relatively okay stock right now. It's got a little bit negative net margin here, and look, it's got high debt on the balance sheet. On the current ratio perspective, it's okay. Very high IV percentile. In these type of scenarios, you could even sell some put option underneath the current stock price and go from there. Given stock is going higher, you could make some money selling some put option or selling some premium underneath the current price here. And if the IV percentile is low, as you look through here, we got few ones with the, let's see here, relatively low IV percentile, maybe say one right here, or RLI lodging looks like it's relatively low IV percentile, just 43 here, and looks like fundamentals are not great. So if the fundamentals are good here in such place, you could buy some options and make some money. Right now fundamentals are not good here. I would not play with the options here. I would rather buy the stock outright and participate in the in the short squeeze type scenario in these type of situations here. All right, so let's look at Coupa here. Look, we got Coupa Software, $66 stock. It's a fundamentally good company right now. It's losing money, as you can see here, 52% net margin. But Coupa wants to go higher. Look, in one day it went higher, mainly because look, there is a high IV percentile. It's 100 out of 100, and it's got a relatively high short ratio and very high put volume. So in these type of scenarios, you could sell some put option underneath the stock price and make some money that way, or you could even buy Coupa Software outright. I think over the long haul Coupa will do well. It's got some short-term pain at this time, given it's a high growth name here with the price to sales ratio of 7 here. All right, so we got list going on here. We got Yeti is one of the good stock here. Look, Yeti has got nice overall score of 77. That's relatively good here. And look, Yeti has got high IB percentile 76, and RSI is low. And look, a very high put volume here. You could sell some put option under the current stock price, make some great money, or you could buy Yeti outright at the current stock price here at 45, mainly because stock is going higher. So it's a contrarian play. It can also squeeze those shorts and go higher. And there are some fundamentally good companies here. Look, we got KNX here. KNX, as you see here, right here, Knight Swift. This is a fundamentally good company. Look at the overall score, 89, and look at the IV percentile, it's very high, and stock is still struggling, as you see here. You could buy the stock outright here, KNX, or you could sell some put option under the stock price way below and make some money that way also. So when the company is fundamentally good, when the overall score is above say 40 or so, you could employ selling put option strategy, especially when the IV percentile is high, say above 50 or 60 or 70. You could sell some put option, make some money that way. All right, let's jump in, look at few more names here. Look, list continues here. Keep a watch on the PC put call ratio, short interest. All have got a higher short interest and higher put call ratio, and you could take advantage of this and be a contrarian. Market is already being a contrarian. Market is slightly going higher on these names here. Look, some of these names have already gone higher. Look, HCAT here, it's up 11% in yesterday's market. That's why these are contrarian plays. When this happens, when there is too much negative news in the market, these stocks tend to buck the trend and go higher, like you see here in 1 day, 5 day. All right, now let's jump in and do a quick conclusion. From a conclusion perspective, when the negative sentiment is running high, as an example, high put volume, high short ratio, low RSI, low float, the stock tend to go higher. They want to really reverse the course at this time and squeeze those short sellers and go higher. And at this time, you could if you're a stock buyer, you could buy the stock, or if you're an option strategist, you could play some option strategies. When the IV percentile is low and low RSI and overall score is more than 40, this tells you volatility is low and stock is sold off with the low RSI. You can be a buyer in the sense you could buy the call option and go from there, or you could even buy call spread. But when there is a low IV percentile and a high RSI, low IV percentile tells you volatility is low, high RSI tells you stock is overbought, it's too high at this time, and overall score is less than 30, tells you it's fundamentally not a good company. You could sell put options at the current price and make money as the stock comes sliding down. And when the IV percentile is high and when the RSI is low, that tells you stock is sold off here. If the overall score is above 40, that tells you it's a good overall score. Then you can sell some put option below the stock price, say 45 days out or so, and you could make some good money by selling put option by collecting those premiums. So with that, thank you very much. Happy investing and trading. Please subscribe.